all of my forward-looking indicators have been suggesting that liquidity is going to keep rising and that it would drive crypto and tech more than anything else. And that's basically been the story of the year so far.
More quantitative easing coming soon? If so, we will see tech stocks and crypto rally as the governments around the world continue to print and devalue all the fiat currencies. Crypto family, welcome back to the channel. We're coming back at you with another video today. Raoul did a recent interview where he talks about a lot of interesting things for crypto, Bitcoin, and the future of the markets. He believes that we could see a rebound here over the next year or so. He also shows some charts, talks about inflation, quantitative easing that is potentially coming. He talks about a lot of great points in today's video. So I want you guys to check this one out. Watch it to the end. Like if you found any value. Let's go ahead and play the clip.
All of my forward-looking indicators have been suggesting that liquidity is going to keep rising and that it would drive crypto and tech more than anything else. And that's basically been the story of the year so far. And I think that continues. And that's confused a lot of people. The one trade that's confused me is the bond trade, and that's confused a lot of people. Bond yields should have fallen by now, and they still haven't. But I think this is to do with the debt ceiling issue, which is the other confusing thing. Because the debt ceiling issue has some real risks around it, and we don't really know how to price them. All we do know is people are pretty bearish around it. And I think that's reasonable too, to have hedged around it, because we don't know what can happen. But the chances are that anything that causes a paralysis of financial markets will lead to that expression I always use, more cowbell, more stimulus to come. So we have our financial conditions index, which is based around the dollar rates and a whole bunch of other stuff, which leads this, as does ISM. And it suggests that liquidity is going to keep rising all the way through this year. And the everything code suggests that actually keeps rising all the way through till the end of 2025. So yes, we might have some stumbling blocks. Yes, we might have some hurdles, but liquidity going forwards as the economy slows down and the central banks start increasing their activity, that will drive asset prices higher. So that's the first chart I wanted to show you. So that's the liquidity chart. Why liquidity matters is this chart. This is the chart of the NASDAQ against that same liquidity index. That's the tightest correlation I've ever seen, and it explains 97.5% of all the movements in the NASDAQ is liquidity. And this is around this currency debasement idea. The more the central banks print, the more you're changing the denominator, not the actual value of the asset themselves. So again, the only assets that have really gone up in balance sheet terms are technology, the NASDAQ, and other like the exponential age stocks, and crypto. Also, actually, interesting enough, so is luxury goods. That there's a reason Bernard Arnault is the richest man in the world. Is because what does he sell? He sells scarcity, right? In a world where you're devaluing the denominator, scarce things go up more in price. So Bernard Arnault's balance sheet, his bank account goes up every week. So that's another chart for you to show. And then we can look at this, which is the chart of speculative positioning. Let me change that one and change to this one now. This is speculative positioning in the S&P 500. I have literally never seen anything like it. So the market is insanely bearish, which is why the NASDAQ's up 1.8% today, because people just don't want to believe it. They're angry. They want the market to go down. They want their bear market and they want their justice, and it's not happening. And the reason being is everybody's ridiculously, ludicrously short. On the flip side of the equation, we're going into this, and that's obviously driven by the debt ceiling. The other side of the debt ceiling is this chart, which is the speculative positioning in bonds. Now, bonds, as I mentioned before, have not been playing ball. I thought yields should be falling, but they haven't yet. But look what's going on here. This is the largest speculative short positioning in the history of the bond market. So if anything changes at the margin here, we're going to see a gigantic rally in bonds, which I'm still expecting, but this whole debt ceiling dynamic is getting in the way. Inflation dynamics on the other hand are falling very fast. Things like the Truflation Index, which is a real-time calculation on chain of millions of prices, suggests that US CPI as of today is 2.2%, 3.2%. I think it still goes to zero by June or July, which Alex Gurovich has been talking about both on Real Vision and also on Twitter as well. We're very in a small camp of that. We're also seeing wage growth coming down. We're seeing rents and wages are the most lagging of all. So they're all still to come down. So generally speaking, economy slowing. We've got this whole debt ceiling stuff that's getting people very nervous. The resolution of that, one way or the other, ends up being ongoing liquidity as the economy slows. The banking issues have slowed down for the time being, but doesn't mean it's gone away. These things tend to come in phases. And so technology and crypto tend to outperform. Crypto's been consolidating for a while, but it's still up 50, 60% on the year, still the best performing asset. But again, it's likely to pick up as liquidity comes forward, as shown by our forward-looking liquidity indicators. And we've probably got 20 or 30 different things we could show you to say that liquidity is going up. So I remain massively bullish. There will be a correction at some point in all of this. As people start throwing in the towel in the short positions, then we might get a correction before we continue to move higher later on in the summer. So overall, super bullish. The only one that's puzzling me is the bond market still hasn't played ball, but I think we need to get through this debt ceiling thing, and then a lot of hedges get unwound. I think inflation headline CPI gets to zero or even negative by the summer. It then picks up again, and what we will then see is the slow effects of owners equivalent rents, services inflation, which is mainly owners equivalent rents, and wages. That usually lags on for 18 months. So that keeps inflation low coming out of a recession. And I think the AI thing, as I've talked about, is a deflationary nuclear bomb in all of this. So I think the probability is that unemployment is sticky coming out of this, stickier than expected, and inflation is not as rampant. So even if commodity prices, and I understand there's some tightness in commodity markets, but everybody's tried to take that trade has been taken out and shot right now by the markets. And Dwight Anderson warned us about this on Real Vision. He's like, yeah, they're tight, but there's no demand. And if you keep looking at the supply side of the equation, you'll get carried out because the demand equation will kill it. He said, the next time we come into the upside of the business cycle, we are going to get some commodity inflation, but that can be easily offset by deflation of AI, much like we saw in the mid 2000s with China coming in. They caused a massive spike in commodity prices, but inflation was relatively sanguine because of the effect of China in the WTO meant that goods were coming out cheaper, globalization. This side, we've got AI, which is hugely disruptive, balancing against the commodity inflation that can come. So I think inflation is slower than the market expects.
Thank you guys for watching all the way to the end of the clip. Make sure to hit that like button if you found any value in today's video. And check out the Bitcoin Bros Patreon for exclusive content on crypto and Bitcoin. Bring you new content weekly over there. Check that out if you guys want to. Link for that will be in the description below. And my name is Aaron from the Bitcoin Bros. I'm out. I'll see you guys in the next one. Have a great rest of your day.